Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Jeffrey Halley, Senior Market Analyst, Asia Pacific at Owanda. Hi, Jeff. Great to have you on the show.
Wonderful to be here as ever, Brian.
Now, Jeff, let's first take a look at how crypto markets are performing. They continue to rise. We've got Bitcoin at 52,525. It's up 1.61%. Ethereum is just about touching the 4,000 mark. It's at 3,917 now. It's down 0.15%. If we look at how regional markets have been performing, we've got the Nikkei, which is up 0.85% at 29,911.19. The Shanghai Composite is at 3,649.65. It's up 0.77%. The Hang Seng is also up 0.61% at 26,322.18. We've got the ASX 200, which is down 0.34% at 7,502.8. The Kospi is down 0.67 at 3,181.9. Over closer to home to us, we've got the SGX, which is at 3,096. It's down 0.14. And rounding up the numbers is Bursa Malaysia, 1,581.83. It's up 0.02%. So, Jeff, what's your view on how markets have performed this morning?
Yeah, the markets have been very quiet today because the US is on holiday overnight for Labor Day. Now, the market started off with a slightly negative tone this morning. That's really following on from this poor China and US data we saw last week, and very weak PMI construction numbers from Europe overnight. But what we saw today was an extremely impressive balance of payments figure from China. Both exports and imports in dollar terms rose spectacularly, and the trade balance expanded to $58 billion. That's definitely lifted spirits across Asia, although it hasn't necessarily lifted some stock markets out of negative territory. Most of them are really now just bubbling under that or have risen into positive territory. We've definitely seen that happening, of course, in China, where the Shanghai composite is up. Last I saw it about 0.7%, as was Hong Kong, up about 0.5%. CSI 300 less so. It's very much more tech orientated. Japan continues to run hot because investors there are expecting whoever the new Prime Minister will open up the fiscal stimulus spigots ahead of the Japanese election, and that's driving sentiment there. So overall, the China trade data has alleviated those slowdown fears for now. We're going to have to see what the United States thinks this evening. I was a bit dubious about the price action on Friday. I think a lot of people were already out of the door for the long weekend. I think we'll have a much truer reaction to that US data on Friday when they come back to work today.
And needless to say, and I looked at your notes, your commentary, your daily commentary. Needless to say, you pointed out something very interesting. Despite all the euphoria, employment in the US is still 5 million less than pre-pandemic levels. So there's a lot of people still unemployed. There's a long way to go, despite the rhetoric that, it's hard to find people.
Yeah, look, there are millions of jobs, literally, it seems, in the United States that people aren't going back to now. That could be because they're looking after children at home, because the schools haven't reopened, although that's starting late this week. So I'm expecting that job data to accelerate into the fourth quarter anyway. But also, I believe that maybe that 5 million figure is slightly misleading, because I suspect that sadly some people have died, but also people have taken early retirement, and so that pool of jobs that they have to make up may not be quite 5 million now, as was pre-pandemic. But nevertheless, as you say, there's still a lot of slack in that labour market, even though all we read at the moment are sort of rising prices, employers can't find jobs, rising wages there. There are still a large number of people there, and it's very much in tune with that K-shaped recovery, where some people are doing much better post-pandemic than other groupings.
The Australian numbers are supposed to be out anytime now. I think the expectation for the Reserve Bank of Australia is to keep rates unchanged at 0.1. What's your view in terms of whether or not they'll roll back their tapering plans? Because that should be announced anytime, right?
Yeah, it's actually just come out, and I was actually just reading some of the summary of it as you were chatting there, actually. So they are going to continue buying securities at the rate of 4 billion per week. So they've rolled back their intentions to taper that buying. Clearly, with New South Wales and Victoria in now very extended lockdowns, and those are set to continue probably for another couple of months until they hit those 80% vaccination targets. There is going to be a massive knock-on to the Australian economy in Q3, and there could be a technical recession. CBA's chief economist today was writing that this time around, the post-lockdown recovery won't be as fast as previous ones, simply because of the extended nature of it. And that had added to the gloom in Australian markets, which saw iron ore prices fall very strongly overnight as well. Look, we've seen the Aussie dollar fall out of positive territory after that headline number down to 74.25. It's dragged Kiwi with it. But I do believe that the sell-off will be really quite short in nature. Aussie and Kiwi are being driven by global risk sentiment. And with a Fed taper off the table, I believe that risk sentiment will increase and the appetite for risk will increase with investors. So I think the Aussies are buy on the dips at these levels.
And also, some of the things that come to mind in terms of Australia is this: the $200 billion of tapering of stimulus money runs out pretty soon.
Yeah, look, the thing is that Australia is a rich country. I mean, they run their finances really quite conservatively. They're not for nothing are they a AAA rated country. So to be honest, they have plenty of fiscal firepower left if they choose or need to deploy it. But I think right now, Australia is actually, I mean, I think it's been a very incisive measure, as it has been in New Zealand, where the governments have invested heavily as the economy fell into this COVID-19 recession. And that's really has taken the edge off it, and it's kept people in jobs, and it's been very, very successful. I think right now, though, Australia is focusing on getting those vaccinations in people's arms so that they can reopen the economy and live with this virus.
Now, Jeff, what should we be looking out for the rest of the week that will move markets?
Yeah, look, the calendar is actually pretty quiet this week, to be honest, compared to last week. I think the highlight will be, now that we've had the China balance of payments data, we'll have the US JOLTS job numbers, I believe, tomorrow night, which will give an idea of just how many open positions there are in the United States of America at the moment, and that may bring back some of that tapering noise. But I think the highlight will be the European Central Bank's policy decision on Thursday, where the decision will be whether to start enacting a tapering of their quantitative easing as well. I'm 50-50 on that one. There's a lot of noise because of the inflation data there at the moment, especially from the Northern European hawks. But I think the doves will carry the day on Thursday, and we won't see the ECB start to taper yet. They'll want to see more data from both China and the United States. We also have Bank Negara, I believe, on Thursday as well, where right. I expect that they will hold rates steady. I'm expecting the Malaysian ringgit to outperform now, actually. It has had a spectacular rally, but at 1.75%, even with those low rates, it's still quite an attractive carry trade in this 0% world. So assuming that risk appetite remains firm in the United States and the dollar falls through this week, I expect the Malaysian ringgit to continue rallying.
Now, Jeff, as always, thank you very much for taking your time to speak to us.
Always a pleasure, mate. Have a great day.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at Awanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out our various platforms and like and subscribe to them. And also check out our website, www.biztech.asia. Thank you very much for tuning in.